The stock market, specifically the S&P 500, is showing a lot of optimism this week, while the bond market is suggesting a potential economic slowdown. There is a lot of mixed outlook between the two of these. The bull market is also in full effect. I think there is a lot more room to go to the upside with this bull market. So much to cover, from the bond market to the stock market, tariffs, yield, Tesla, Nike, Apple, and so many others. Welcome to another Markets in Under 5, where I cover everything you need to know this week for the stock market in just 5 minutes. So without further ado, let's get into this video. So starting with the S&P 500, we are up almost 5.5% over the last 3 weeks. Obviously super bullish here, and I think there is a lot more upside potential for this market, which I'll explain a little bit later in this video. On the weekly chart, we do have some unfilled gaps here that I do want to point out. On the weekly chart, the only one that we have here is between $575 and $570, but I honestly doubt that this gets filled until much later on. What I'm more focused on is this weekly fair value gap that you can see right here that formed. I think before continuation higher, we have a pretty good likelihood of coming down to fill some or all of this weekly fair value gap, and then probably using that as support to go higher. And if you've been a watcher of this channel for a long time, you know I love this data point. Bull markets last longer than you think, with an average bull market lasting around 61 months. With the bull market that started in October of 2022, which is the current one we're in, we're actually about 33 months into this bull market. This is a little bit of a delayed picture, so don't worry about this time. So if we use the average data of about 61 months for an average bull market, we're looking at a potential of another 30 months for this bull market, just assuming that the average, some are longer, some are shorter. 30 months from now puts us at January of 2028. Now, I'm not saying for sure the bull market is going to last until then, but just keep in mind, if we do follow the averages, it is possible. Going into the daily chart, we have a very similar type of scenario playing out. We have this gap here between the 560 and 570 range. We also have another gap that formed here on the daily between the days of June 24th and June 23rd. So a test down into this level would not be surprising to me before continuing higher. This market is really showing no signs of slowing down. Even when we saw the Trump news about imposing a 50% tariff on Brazil, the markets didn't really care whatsoever, and we just kept climbing higher and higher. And super quick, before I go over the stocks I'm looking to add for the short term, a very interesting article that I saw here: stocks and bonds disagree on the economy again. They both can't be right. Obviously that is true, both cannot be right at the same time. So you basically have to decide whether the stock market is in the right now and it's going to keep going up, or whether the bond market is actually signaling there's going to be some kind of a decline in the short to midterm. You can see the 10-year versus the 3-month treasury here is finally uninverting. When this happens, this is basically a signal that investors believe that the Fed is going to start cutting rates and that the economy is going to start stalling. And while this can be true, we don't know exactly when that is going to occur. We can easily see the market continue higher while the Fed is cutting interest rates, and then from there we could see a decline later on, which is what I think will probably happen in this situation. It could be 6 months from now, it could be a year, even 2 years from now. Nobody knows. And that's always why I preach you need to be looking for quality companies trading at cheap valuations and keep buying dips on these companies for the long term. Okay, so now that we have that out of the way, let's talk about a few stocks that I'm loving right now, with the first one being Tesla. So starting with the technicals, this is the monthly chart. You can see we have this massive monthly fair value gap on Tesla, and in the month of May we actually had a pretty massive rally. Surprisingly, June was a poor performer. Normally June is Tesla's best month of the year, and you can see we actually had quite a red month. But if you look closely on this monthly chart and this monthly fair value gap, you can see that we left a little bit of open space, a little bit of unbalanced price action here on the monthly. And so one area that my eye is set on for Tesla is going to be this monthly fair value gap with a high of $373.04. Obviously I'm heavily long Tesla for the long term. If you're looking for potential swing trades for this stock, I think that buying short to mid dated calls on Tesla is not a terrible idea. Obviously assess the risk yourself, but you're looking from here at about an 18% return from current levels if you are to invest in these areas and hold up to the rebalancing of this fair value gap. Not to mention, Tesla's sentiment is continuing to go up as the robo-taxi expansion is continuing. Tesla applied for regulatory approval in Arizona, and Elon Musk also mentioned that in the next 1 to 2 months they are looking for approval in California and San Francisco. Other cool news that came out with Tesla is that they have Grok being integrated into all of their vehicles, and they also have a really cool feature that I'm excited to get on one of my Teslas, which is called Light Sync, where it actually syncs the lights in your car to the music that's playing. Obviously not a market mover relating to Tesla, but just a cool feature I wanted to make note. And so for technicals and also sentiment reasons, I think that Tesla does have the potential for upside over the next few months. And by the way, guys, if you want access to all of my plays, any plays that I make on Tesla or any other stock that I mentioned in this video, come join the community. Link will be in the description below. Another stock that I am eyeing here is actually Apple. I have seen tons of articles related to Apple titled Apple at Crisis. Can they catch up in the AI race? Lots of bearish sentiment related to this stock. And so when I see a lot of bearish sentiment or a lot of information to one side on a specific stock, I'm often looking for the opposite. We have this massive trend line that formed. We got a pretty big breakout to the upside here. Daily chart, very similar. There are tons of fears that Apple is not going to be able to compete in the AI race. I think that is blown out of proportion, as they are very likely to acquire some kind of a smaller company. Like Perplexity is one of the big ones that a lot of people are talking about. If we do see official news that I make a purchase of a smaller AI company, I think we're going to see Apple pump up to a lot of imbalances. You can see on the daily chart, we have a massive fair value gap right here. Apple has also yet to fill this daily fair value gap. So I think another target for Apple will be this 221 level to fill this gap, as well as this daily fair value gap that you can see here between $235 and $226. So if we can get some pullbacks on Apple into these two daily gaps, you can see here, one is at 208, one is at 205. I think this is a great spot to add for the short to mid-term, with your targets being the high of this gap and the imbalance you can see here on the daily, which is this daily fair value gap in the 220 range. A stock that we are now fully out of, I've called this many times before, is Boeing. Everybody hated Boeing here in the 150s. This is when me and the community were adding Boeing. For all the haters that don't believe me, on October 3rd of 2024 was when I first added Boeing. You can see here that Boeing was trading at $151. And if you look at Boeing now, we are trading at $226. We are up almost $100 per share. Admittedly, I took most of my Boeing position, in fact, almost all of my Boeing position out at $215 at the bottom of this fair value gap. But nonetheless, for those of you guys who continue to hold this, congratulations. And for those of you guys who have stuck around to the end of the video, the ticker symbol that I'm looking at here is Nike. And you can see that we finally inversed this monthly fair value gap that I've been talking about for a long time. Now, admittedly, I did add this a little bit lower. My cost basis on Nike right now is at $63.50, give or take. I think this has tons of room to the upside. We have so much buy side liquidity, lots of unbalanced fair value gaps. My main target, if you look at this wick here on the monthly chart, this is my main area where I'm going to be offloading this position if we get there at $109. The reason for that is because we have an unbalanced weekly fair value gap here. So an idea that I'm looking for on Nike is a retest of this fair value gap here on the weekly to ultimately go up and hit buy side at 82, buy side at 98, and then fill this unbalanced weekly fair value gap. So that is it, guys. I covered the stock market, the bond market, discrepancies between the two, tariffs, Tesla, Apple, Nike, Boeing, Bitcoin, so much more. Again, if you guys want to be a part of the community, come join. Link is in the description below. Appreciate your time. Hope you guys learned something. Make sure you like and subscribe if you do, and leave a comment. What do you think the market is going to do over the next few weeks? I'd love to hear your feedback. Best of luck to you trading this week.